Hi and welcome back to another Very Finance video. In this first episode of our special cryptocurrency series, we dive deep into the world of digital currency and explore a phenomenon that has changed the financial landscape forever. Whether you're a seasoned investor or a curious novice, we promise you'll learn something new. So sit back, relax, and let's dive into the intriguing world of Bitcoin. Ever wondered who actually created Bitcoin and why it came into existence? It all started in the year 2009 when a pseudonymous person or group of people known as Satoshi Nakamoto launched the world's first decentralized digital currency, Bitcoin. This wasn't just another currency though. Satoshi's vision was to create a new form of money that was independent of any central authority, a currency that couldn't be controlled by any government or financial institution. The introduction of Bitcoin was a revolutionary moment in financial history. Its creation was announced with the release of a white paper titled Bitcoin, a peer-to-peer electronic cash system. Here, Satoshi outlined the mechanics of what would become the world's first cryptocurrency. Yet, despite the global impact of Bitcoin, Satoshi Nakamoto remains a figure shrouded in mystery. Their identity, whether an individual or a group, is still unknown, leaving us to marvel at the enigma that is Bitcoin's inception. While the creator's identity remains unknown, the impact of their innovation is undeniable. How does Bitcoin function without a central authority? The answer lies in blockchain technology. Blockchain technology is the lifeblood of Bitcoin. It's essentially a public ledger, a transparent record of all Bitcoin transactions that have ever taken place. It's like a giant, decentralized spreadsheet with each entry being a transaction. This ledger isn't stored in one place but is distributed across a network of computers or nodes around the world. This decentralization is what gives Bitcoin its security. Each transaction is grouped with others into a block, which is then added to the chain in a linear chronological order, hence the term blockchain. Each block is linked to the one before it, creating a traceable history of all transactions. It's like a digital breadcrumb trail that can't be altered or deleted, ensuring transparency and security. But how do new Bitcoins enter circulation? The answer is Bitcoin mining. Miners solve complex mathematical problems, and when they do, they validate a block of transactions and add it to the blockchain. For their efforts, they're rewarded with new Bitcoins. This process also maintains the integrity of the blockchain, as the mathematical problems are linked to the transactions themselves. The beauty of this system is that it's self-regulating. If too many miners join the network, the problems become more challenging, maintaining a steady pace of new Bitcoins entering the market. Blockchain technology, the backbone of Bitcoin, is a revolutionary system that offers security and transparency, changing the way we view transactions. As we delve deeper into the world of Bitcoin, it's essential to gain insights from industry experts. Michael J. Saylor, CEO of MicroStrategy, is a key voice. He perceives Bitcoin as a bank in cyberspace, a store of value, and a viable investment alternative. His perspective illuminates Bitcoin's disruption potential. These varying perspectives underscore the complexity and potential of Bitcoin, setting the stage for our next segment on Bitcoin's impact on finance and society. Bitcoin, once a fringe concept, has now permeated mainstream finance and society, but how exactly? Let's start by looking at the financial landscape. Bitcoin has challenged the traditional systems by offering a decentralized alternative to fiat currencies. Unlike government-issued currencies, Bitcoin is not controlled by any central authority. This allows for greater transparency and a degree of immunity against inflation, which is particularly appealing in countries with unstable currencies. Moreover, Bitcoin has facilitated international transactions, making them faster and more efficient. No more waiting for banks to clear your international transfers. With Bitcoin, transactions are processed around the clock, cutting down processing times and reducing transaction fees. But Bitcoin's impact goes beyond finance. It has also influenced society at large. It has sparked debates about financial privacy and sovereignty. Bitcoin transactions are pseudonymous, meaning they can be traced but not directly linked to individuals. This has raised questions about the balance between privacy and the need for regulation to prevent illegal activities. Furthermore, Bitcoin has pushed us to rethink our understanding of money itself. It has shown that value can be stored and transferred digitally, without the need for physical representation. This paradigm shift has prompted us to question the very foundations of our financial systems. The impact of Bitcoin is far-reaching and profound. From disrupting traditional finance to sparking societal debates, Bitcoin is more than just a digital currency, it's a catalyst for change. Bitcoin continues to reshape our financial systems and societal norms, challenging us to rethink what currency can be. Is Bitcoin just a currency, or can it be an investment too? This question has been the subject of numerous debates since Bitcoin's inception. Over the years, Bitcoin has evolved from being purely a digital currency into a speculative asset, attracting the interest of investors worldwide. The rise of Bitcoin as a form of investment has been nothing short of phenomenal. The digital currency has seen massive swings in price, making it a volatile, yet potentially highly rewarding investment. In 2017, a single Bitcoin was valued at less than $1,000. By the end of the same year, it had surged to nearly $20,000. This meteoric rise has led many to see Bitcoin as a lucrative investment opportunity, yet with high potential returns comes high risk. Bitcoin's volatility can lead to significant losses. Furthermore, the lack of regulation and potential for hacking also pose considerable risks. It's essential to understand these risks before diving into the world of Bitcoin investing. Amid these risks, a popular strategy has emerged among Bitcoin investors known as hodling. This term, derived from a misspelling of hold, refers to the practice of buying Bitcoin and holding on to it regardless of price fluctuations, with the belief that its value will increase over time. Many see Bitcoin as digital gold, a hedge against traditional financial systems. While Bitcoin presents exciting investment opportunities, it also carries significant risks. Always do your research and invest wisely. With all its promise, Bitcoin also faces challenges and controversies. What does the future hold for this digital currency? Now let's delve into some of the prominent challenges. One of the major issues is Bitcoin's high energy consumption. The process of mining Bitcoin, which involves solving complex mathematical problems to validate transactions and secure the network, is incredibly energy-intensive. This has raised environmental concerns, as the energy used for Bitcoin mining is comparable to the annual energy usage of some countries. Another controversy surrounds its use in illegal activities. Since Bitcoin transactions can be relatively anonymous, it has been used in illicit activities like money laundering and black market trading. This has led to calls for greater regulation and oversight. Speaking of regulation, this is another significant challenge. Governments around the world are grappling with how to regulate Bitcoin and other cryptocurrencies. Some fear excessive regulation could stifle innovation, while others argue it's necessary to prevent fraud and protect consumers. As for the future, opinions vary widely. Some see Bitcoin as a bubble, a speculative asset with no intrinsic value that's destined to burst. Others, however, view it as the future of finance, a store of value and digital gold that will revolutionize the way we conduct transactions. Regardless of the challenges and controversies, one thing is clear: Bitcoin has made a lasting impact and will continue to shape our digital future.